Good morning. This is Dylan Jovine with Behind the Markets. Happy Friday. Today is January 3rd. And today I wanted to talk about a piece that I picked up from Stanley Druckenmiller, the very, very successful former hedge fund manager and multi-billionaire, who basically got 30% returns for decades, really. And he worked for George Soros and just an incredibly successful macro investor. And from time to time, I kind of share information that I get or perspectives from very sophisticated investors who understand what time it is, not just the regular talking heads that want to hear themselves babble on. So anyway, Stanley Druckenmiller said that he really is worried about a repeat of the 1970s-style inflation. In other words, we could be entering kind of a stagflation decade. And normally you chuckle at things like that, but he really talked about the Fed. And he said inflation has been pretty stubbornly high and it shows its head, it's popping its head up a little bit. And if you look at the 1970s in America, what happened is the Fed would raise rates, inflation would come down, then they'd start lowering rates without getting inflation under control, and inflation would spike up again. So the 1970s saw inflation up and down. Every time they thought they had inflation under control, the Fed would lower rates and inflation would pop back up. So there's a lot of folks who think, frankly, that the Fed did not need to lower rates, lowered them too far, too fast. With a strong economy, why on earth would you do that? And the fact that we've seen inflation pop back up in their most recent reports really lends credence to that kind of thought. So that is really concerning. And the question is, what would make inflation really sticky? And look, Trump, to his great credit, he tells you what he's going to do. It is what it is. He says, I'm going to levy tariffs all over the world, and he'll levy tariffs. It is what it is. But that is inflationary. Remember, if you have to spend, if China imports get taxed by another 10 or 20%, that means your money doesn't go as far when they buy China imports. That's like an inflation tax. There's no doubt about that. Government spending. If you think Trump is going to spend more and keep running the deficits and is going to spend a lot of money and try to boost the economy, that is inflationary. And he, of course, says that he's going to do that. These are all very inflationary items. And this really brings us back to the theme that I talked about earlier this week, why big investors are really a buyer strike against long-term treasuries. Because long-term treasuries that pay 4.5%, you say to yourself, I'd rather go out 3 years, 5 years, or whatever, get 4.2%, instead of 30 years at 4.5%, 4.7%, because the spending here is just degrading the value of the dollar every year. So there's been an international buyer strike is starting to take hold against long-term treasuries, which is also inflationary. It's very inflationary. So there's a lot of things that are bubbling up that are real warning signs that are on my mind as we enter 2025. So I just want to say that I don't know if we get into a financial crisis next year or next month or whatever it is, but I'm worried that the Fed declared victory too quickly. I don't have conviction like I did in 2021 that inflation's going up or the money supply was growing. They're just printing all sorts of money. But I do have conviction that they have not snuffed this thing out, this inflation out. The proof is in the data. And this is why the Fed's kind of pulling back. And I remember studying the 70s. I was a little kid, so I didn't really know what was going on. But the inflation, again, they bring it back down. The Fed would lower rates, and then it would spike again. It was like a cancer that needed chemotherapy. The minute you remove the chemotherapy, the higher interest rates, it would pop back up. And with what looks like is going to be very inflationary policies, this is something that the bond market and the gold market is telling us this is very likely. Anyway, that's all I have today, this Friday. Have a great weekend.